Hello, hello, hello. Welcome to Al Stock Trades. All right, guys. In this video, this is going to be a tutorial on how to use the mastering lifetime access and with the lifetime access to the stock terminal to go ahead and ask a simple question. Is the, let's say a Hershey stock company, the Hershey chocolate bar company, is it a good deal? Okay. So I'm doing this video because one of our members came into me saying, I want to analyze Hershey. So I'm just trying to figure out, how would you use the terminal to essentially answer this question? Is it a good, uh, you know, company, and how to create an intrinsic value calculation. So this is going to be the purpose of the video here. So what I'm going to do is, so for folks that are in our lifetime, you log in, right? You log in here and you go all the way down to our intrinsic value calculation. So you're gonna right click and you're gonna open up this guy here. Okay, we're gonna open up one. We're gonna open up a couple of them here, right? So we're gonna open up this guy, right? Then we want to go in and do a 10-year projected stock price linear progression. So we're going to open up this one. Okay. So we're going to open up this guy. Okay. And then we're going to go down here. We're going to do a compound annual growth rate calculation. Okay. We're going to open up this one. Okay. So this is a nice calculation. So we open up three menus from the alstocktrades.com website. Okay. Now, we're going to go to our stock terminal, and there's a couple things we're going to do, okay? There are two different types of intrinsic value calculations. There's a manual one, which is the one that you guys know about, right? The bull, base, and bear and recession. This is the one that you have to input manually, okay? Then there's the automated one, the one that does it on its own, okay? Now, obviously, there's pros and cons of each, right? The pro of the automated one, the one that Brain Machine does, is it's fast, it's really quick, and it's pretty much, you don't have to plug and chug, right? The con of the Brain Machine one is you can't curtail and modify the intrinsic value to suit what is actually happening with the company. Meaning that, let's say, like with NVIDIA, the price basically started going up and they just released earnings, and the earnings was a blowout, and they outperformed by billions of dollars. Well, obviously, Brain Machine needs time to update, right? So you're not really going to get the most accurate. In fact, if we were to do DCF of NVIDIA here real quick, we could see that it's, stock price is 682 and the DCF is 88, right? We know that's not true, right? Obviously, there's other intrinsic values that we have that we can use, the ALDCF, advanced leverage, which again shows you an 89, right? So there are benefits of using the manual one. Now, the question is, why even have the automated one? Well, sometimes you want to go through a lot of companies and you're trying to see if there's value. And about 70-80% of time, when the DCF or the intrinsic value calculated by Brain Machine is higher than the stock price, and there's some value. Obviously, with NVIDIA, you need to take a look at the revenue percentage. You need to take a look at the inputs that it's using. Obviously, some of these are not a true reflection because they just recently, they just blew out of the ballpark. So it takes Brain Machine some time, to figure out the calculation here. But overall, the manual would do it well. So what we're going to do is to do the intrinsic value automated for Hershey. All you got to do is, first off, you go to your the software section here. Anywhere you see a terminal with the computer, right? You can use all three of these. This one, we reserve it for the AI. So you can ask, what is a DCF? This is your own AI. But what's happening here is you open up the help menu. Okay. And once you do that, you have a wide selection of things. Now, I recommend going to alstocktrades.com and looking at our stock terminal list, because again, we have a lot of commands, And all you have to do is just go to alstocktrades.com and you go down to the detailed stock terminal command center. And like, for example, if you want to preview, it'll show you how the command looks like, right? And if you want the command, you just, copy this here. That's the command, right? And there's a lot of commands. We have 2.5 billion outputs, right? You can see it's a long list, okay? So anywho, so that, this is why, you need to kind of go through this and, and go through each one to see how this will help you. Then ask the AI to get more information on what each one means. So the next step is you want to go to intrinsic value calculation. You want to click that. It's a button, right? So now you have three different types of DCFs. You have the company's discounted cash flow value, you have the advanced discounted cash flow value, and the advanced leverage discounted cash flow value projection. You then go ahead and let's say you could click on it and you want to go in and type in the Hershey stock, the Hershey. You type in HSY. You type in HSY and you get a DCF, which is the price target of $377. But then you get a stock price of $194. So what does that mean? Well, the stock price is the stock price, right? So if you go here, the stock price is around $194, right? The DCF is higher. So obviously, you want to buy a company that is worth higher than what it's selling at, right? So obviously there's some value here. But again, you have to look at the potential accuracy of this. So we can go in and do the other DCF, which you could just click this button and type in HSY. You do that, and then you go in and you see, okay, equity value. So this gives you the revenue percentage, EBITDA percent, all these things, right? But the biggest one you want to look at here is the equity value per share, which is $270. Okay. And again, this goes out to 2026. Okay. So, 2027. So we go here and now we have one more DCF, the advanced leverage. So we go in and we type in HSY. Again, these are all different types of ways of looking at it. And then here we have $384, right? So obviously there's some form of value to Hershey. Okay. So now we just completed an automated intrinsic value. But let's say right now you want to go in and you want to do a intrinsic value calculation that's manual, or a 10-year projected stock price linear progression utilizing the data. Now, if I didn't give access to the lifetime access to the stock terminal, there's, it would be very difficult for you to fill in these boxes. Yet again, fill in the boxes here. Now, we used to have Morningstar, which then for some reason after the pandemic, they stopped releasing this data. They had this data for over 15 freaking years. And after the pandemic, they just stopped it. So we had to create our own stock terminal so people can go ahead and use the data. So we're going to go ahead and show you how to get this data. Now, before we do that, I want to just analyze this company, Hershey. What is a Hershey company? Well, it's a chocolate company. Okay. So when you go in and look at Hershey, it's a 39.5, so it's almost a $40 billion business. Okay. The problem is that one must look at is these companies offer a 2.83% dividend yield. So they're in their late stages and they're pretty much incumbents in the field, right? The problem is these folks may get disrupted, right? Now, again, how can a chocolate company get disrupted? Well, let me just give you kind of a quick answer here. If you go to Mr. Beast, and if you go in and look at this video here, and he creates a 3-minute advertisement that's really good, and he does everything he learned, gives you the taste test, which obviously everyone picks Feastables, and he then gives people $10,000 for scanning some QR code. So there's a call to action. And this thing has been released 3 days ago and has already 5 million views, 5.5 million. And and the view count is growing. In fact, I actually can probably tell you how many view counts is growing on here. See if I could tell you here. Yeah, so it's getting 42,000. So I have this add-on. It gives you 42,000 views per hour. Okay, so that's pretty much that's what he's getting, and it's currently in the number 50 trending videos on YouTube. Okay, and he probably has one on Twitter too. The point that I'm trying to tell you here is that this guy has his eyes set on disrupting the Hershey market. And he has brand awareness, and he has the next generation that likes his chocolate. And parents are going to like it because it only has a couple of ingredients. I've tried it. It's okay, right? The point is, again, this is not part of the intrinsic value calculation, but the biggest weakness of an intrinsic value is it's just going to give you the numbers. You got to look at the business. You got to look at the moat. You got to look at the competitive advantage, right? Which we have questions where people can ask downloadable questions here. Folks can ask here on. Let me see if I can freaking find it here. So let me see if I can get it here. Let me see what download here. Downloadable files, competitive advantage analysis, economic, risks indicator, all these things you can ask yourself, is this a good company or not? Okay. So now that I went through that, because again, this is again supposed to be educational, right? We're going to go in and we're going to open up the help menu again. Okay. This time we need to get the data to be used for the mastering, right? The intrinsic value. So you would gonna go ahead and press master analysis. Okay. Then you want to get your 10 years of key financial data. You can get an Excel format, or you can go ahead and get in a table. Sorry, I think this one here. So we type in HSY. Again, you might have to send the command twice or 3 times. Again, this is a Discord related issue. Again, it graphs them in time. So you're just going to have to just do it 3 times here. And once someone else does it, it activates, and Discord is like, okay, yeah, we see you and we hear you. And then it goes ahead and processes and does its thing. So once it processes, give it some time. Again, it's putting it in real time. Then it makes the table. So this is the graph, right? So this is good for folks that want to look at the overall revenue, gross profit, operating income, net income. So obviously, they're doing good, right? Let's see here. These are things that we get, but again, that's not what I wanted. I clicked on the wrong thing. I wanted the table, right? So I'm not too sure about that company, but definitely watch this tutorial. And if you like what you see, you can learn more about the company using the stock terminal. All right. So this is the key financial data for Hershey's. And so let me show you how, you're supposed to read this. So obviously this is 2013 to 2022. And then this is trailing 12 months. Okay. So you could see in 2013, by the way, we don't really need to go before that. Again, 10 years is good. In fact, most people do use 5 to 7 years. Because if you graph this, sometimes, companies take a big pivot and start increasing. You could see they've been in 7 billion. All of a sudden now they're selling a lot of chocolate. So, maybe the pandemic, people really were hungry. So $7 billion. Again, these are 7,146 million, right? So what the hell is million? Again, how many millions in a billion? Well, 1,000 millions in a billion. So you got to learn how to read numbers. If you want to be wealthy, you got to understand numbers, right? So, this is $7.1 billion. Okay. This is $10 billion. So right now they're getting 10 billion in revenue. Then you want to look at gross profit. Gross profit's been going up. So obviously it's they take a pretty good considerable amount. So it's pretty good. Operating income has been going up. Operating income ratio is doing well. Again, if you don't know what this is, the mastering teaches you. There's PDFs that explains each one. And for folks that don't want to get the mastering, you could go in and you can read about it in our book here. We just published this book called How to Find a 10-Bagger. This book shows you essentially how to essentially breaks down this section, and shows you how, essentially how to find a 10 bagger. Obviously Hershey is not a 10 bagger, and obviously here's our top selling book. I'm curious to see, is it still top 10 selling? Sorry, it's the top 100 best selling. So yeah, it's still in the top 100, right? So it's top 40 right now. All right. So if you go down here, you see our book in the top 40. All right. But that's pretty much, if you guys want to read more and learn more about these terminologies, we have this. This is dividends. And sometimes you want to look at the payout ratio. Again, if the payout ratio is pretty high, it means they're financing it through debt. So you got to be careful. Also, you got to look at the balance sheet and everything like that. But again, that's not the point of the video. The video is not going to be like looking at a whole freaking company. We're just going to show you how to do an intrinsic value right now. Okay. So, so let's go ahead and here's the book value per share. The book value per share is growing. Oh, someone just commented, "Hey man, quit taking my stock picks. First SoFi, now Hershey. Glad we both see opportunities in these companies." Oh no, hey man, that's awesome. Actually, I have to give it out to Wes, one of our mastering stock market members. He's a lifetime access member. He actually reached out to me and said, "I'm trying to analyze this company. Can you kind of point me in the right direction? There's just a lot going on." Again, guys, there's 2.5 billion outputs here. So I expect you, if you don't get if you're not phased by this or daunted, then you're not, then you haven't looked at it. So it's a lot, right? So so here's the payout ratio, and here's the share. So you can see there's minimal dilution. Obviously, if it goes up to like 800 million, from 200, then they're diluting the crap out of the company. Here's the book value per share. So it's growing. So $7 to $10. Operating cash flow is doing well, is increasing. Free cash flow went from 837 million to 212 million. Now, again, there's a couple ways to do intrinsic values. You can use the free cash flow from the past 10 years, which we will do, or the past 5 years. Okay. Obviously, past 5 years will be more accurate than rather 2013. Okay. Given that they're making more money. All right, what else? Return on, obviously, whatever Mr. Beast is doing is not working on Hershey, or Hershey is continue growing. But again, Mr. Beast may do something else. It is in every Walmart now, right? And I know Hershey because I close my eyes, I think of Halloween, I think of a Hershey bar, and a small little cute Hershey bar. The first diabetic, sentence that Hershey has inflicted on me. God forbid. I'm not, God forbid, but it's, chocolate, American chocolate's not the best. Okay. Exactly. Last 5 years more accurate, but last 10 years is more conservative. Exactly. Doing last 10 years will help really get you that margin of safety, especially when you do a discount rate, right? When you do this discount rate, it'll really protect you. Absolutely. We're on the right, same wavelength here. Okay. All right. So, and here's the free cash flow per share. Obviously that's going up if the free cash flow is going up, right? And here's the return on assets. Here's your return. And again, this is supposed to be in percentage, but it's fine. It's an easy fix on the programming side. But this 15%, 14%, 14%. Correct me if I'm wrong. Return on equity. That's pretty good return on equity, guys, as an investment. Current ratio is 1.05. Quick ratio. So debt to, so their debts, again, it might be high. Again, I need to look at it here. And here's the other one here, price to sales. The price to sales is around 3.9, but it's been historically going from 4.4 to 4.5 most recently, and about 3.72. Again, this was when the market was high. Okay. So you could do two different calculations. You could do, like, again, this is for the 10-year projected linear progression calculation. Again, you haven't really seen me use this. So we're going to go ahead and use this right now so you can kind of see what I'm doing. But overall, I like to be conservative on this too. Again, you have to understand 2020, 2021, 2022, there was a, huge bull market, and the Feds, were just, a lot of money was pumped in 2020. So, these price of sales were pretty high. But again, we've seen price of sales high here too, right? Right. I know, man. I want some Hershey's right now. I got some nice cold brew right now, and it has a little chocolate hint to it. And I'm like, man, I should have gotten some Hershey's with this damn thing here, right? I know. So here's so yeah, just pay attention to price of sales. Okay, so now that we have this, now what I like to do is let's just kind of save this image here. So I can just kind of go in here, save the image, and then what I can do is I can just kind of put this. I can put this here, and then let me go ahead and let me see this here real quick. And let me go ahead and push this here. Oh, okay. So then now we got this, and then let me go here. And now that we have the intrinsic, now let's pull up this guy. Let's go ahead and refresh the page here. And then I'm trying to do this correctly. So if I do this correctly and I push this up and I take this and I go ahead and put this here. Oh, nope. I put this here. We should be able to divide out the screen. Ah, beautiful. Okay. Now I'm going to just make this a little more this way, maybe. Yeah, that sucks. All right. That's fine. We have the numbers here. We're going to have to squint. I don't know. Yeah, that's fine. We'll have to squint here. I can't see it. So what I'm gonna do is I'm going to just download another one for myself, and I'm gonna put it on my second screen here, okay? Because I can't see this. Right? I'm not that good, right? So I'm gonna just put it on my second screen here so I can visualize it. Okay. But now you guys can kind of squint here and see where I'm getting these numbers. Okay. So first things first is I want to calculate the growth rate, right? How much is Hershey's going to grow? Okay. So I'm going to do 20 again. The last 5 years is more accurate, but we do the 2013. Their net income was 820 million. Again, this is a free cash flow positive company, profitable company. You can use their net income. So we can go ahead and do 2023, and their net income was around 1,645. So around that. So they're growing around 7%. That's over the 10 years, right? So there's that. Another thing, we're going to start using the compounded annual growth rate calculation. To do that, there's another command. So sorry, I forgot to show you that, but you go in and type in AE, and it's AE estimates. And you type in HSY, and then you can go back for a long time, but I just hit HSY, and what that's going to do is that's going to look at all the analysts' estimations. So analysts are expecting 2023 to give around 11 billion. And then 2025, they're expected a high of this. So what I like to do is I just like to take the high. I go here and I type in, again, this is in 2025, right? Their revenue estimate. These are estimated revenues in 2025. Analysts give out, 2 to 3 year estimations. And in 2023, we're expected to do anywhere around 11.2. So I just kind of copy this here, right? And I push this starting value. And then I take 2025, or just say take 25 minus 23, you get 2. You put 2 here, and you get an estimation growth of 3.79%. So that's a big, so that 3.79. Now, if you were to go to Yahoo Finance and look at their sales growth, it's around 3. So we're going to do 2 calculations. We're going to do one using the estimation 3.79, and we're going to do another one using the 7%, the past 10 years. Okay. Oh, and to answer your question here, I'm not too sure. I think I paid someone for the rights to use it. So it's not mine. I have to check back with you. I've had it for like years. I really, really like it. It is fire, isn't it? It wakes you up. So now what we're going to do is, again, we could go ahead and do the intrinsic value free cash flow for the past 10 years. But what you want is, let me just kind of bring this bigger one up here. You want to take the last 5 years. So we'll just take 1, 2, 3, 4, 5. So we're going to take these numbers here. Okay. So we can go back here, and I'm just going to go in and I'm going to put the 5 here. Okay. So again, forget the numbers. It just takes the average, whatever. Right. So, all right. So free cash flow, we got 2012, which is 2.2 billion. So that's again, this is free cash flow. These numbers are in millions: 1808, 1587, 1258, and then 1446. Okay. So now we got an average of 1.6 billion. Okay. Then we're gonna go 10 years into the future and discount back. at a 10 to and discount rate's already there. So you can see that, 20, you can see that years now it's projecting. And all you got to do now is divide it by the number of outstanding shares, which you can see here is 207 million, right? So 207. So by doing that, you basically see a recession of 50, a bear of 84, a base of 107, and a bull of 145. Okay. So then you're starting to see, you're like, wait a minute, this thing's growing at 7%, 10 years, divided by, 207 million. It's currently trading at, 193. The brain machine said there was some value, but here it's saying it's not. Again, we use the past 5 years, assuming they're going to continue getting that $2 billion in free cash flow. What we can do is we could start removing, let's say, the last two here, right? We could say, you know what? Maybe they're going to continue growing at this. Again, this gets risky, but you can see how it starts growing, right? But again, let's just remove the last one. Let's say they're going to grow at 2 billion and up in free cash flow. We get 180. So you could start to see that, hey, you know what? This is actually pretty overvalued. So you see how you see how this quickly took a turn, and this is using 7%. If we go ahead and use the actual 3.79% here, 3.79, we got 140, right? We're gonna keep it on the 7%, okay? And now what we're gonna do is, just to kind of get the idea here, let's go and open up. Go to. I'm sure you guys heard of this company. This company charges about $50 a month. It's called Tip Ranks. It gives you analyst projections. Again, we offer this for lifetime access, and everything we offer. But we could go ahead and type in Hershey's here, and we could see what these analysts are saying. So we'll filter for stock analysts, top analysts, and you can see they're really, analysts are pretty much on the sideways here. Morgan Stanley saying a price target 180. Where do they get the 180 from? Where did Morgan Stanley? Where did Morgan Stanley get 180 from? Well, you just saw it, right? They got it from here, right? They got it from the intrinsic value. Again, I'm teaching you how these analysts, do this. Now, again, you guys may not trust analysts, but again, if there's like 21 analysts, they're competing with you have competition here. Okay. Everyone knows Hershey's. Okay. So obviously it's very hard. It's very hard to find value here. And overall, the price target is around, 200, right? So you could see, this person has a price target of 235, but again, are they successful? They're like a 3-star analyst, right? So there's something to consider there. And again, if most folks, you can use the all analysts. You could just, you don't have to search through them, but you can use this here for free, I think. But what you can do is you can go on our stock terminal, and you can open up the help menu again. And there's other menus too that you can use. There's other intrinsic value. There's other price targets you can do, but you can go to price target here, and you can look at the overall price target consensus. This shows you analyst price target consensus of Hershey's. So you can see there's a target high of 269, our target low of 129, and kind of a median around the 228 to 230 here. I'm trying to see if I can get you the price target here. Analyst recommendation. So you could go ahead and look up this command here, DD analyst, and type in Hershey, and you can see the overall projection of the analyst. I may have typed in the wrong command. So you need to go to, there's so many commands. Display earnings. Yeah, they may not have it there. So overall, analysts are kind of right in line what we're saying, but now we have another calculation. Okay. So yeah, exactly. Overvalued, right? So now we have another calculation. We can't forget about it, right? We have this one. Wait, where to go? We have the 10-year. We have the 10-year price projected. Now, remember I told you, we could use the the price to sales here. Now, most people use the average 10-year price to sales. I'm going to be getting that averaged out in our stock terminal. But again, you can average it yourself on an Excel spreadsheet. Again, you know what I mean? So, I mean, it's simple math, right? It's just, you take, honestly, you can use the average. You can use this to average it out. You know what I mean? So it's, you don't really need to, have its own thing. But overall, it's currently at, I would say, a four price to sales, I would say. So we do 4. Oh, yeah. Let me refresh the page. So I believe it's a 4 price to sales right now for Hershey's. And then we said it's growing 7%. We said the outstanding shares is 207. And then the 2023, it's growing at about 10 billion right now, right? Let me double check. Make sure we're right. Give me a second here. Go. Okay. Give it a second. Yeah. So anywhere between like 10 to 11, right? So 10 to 11 billion. So it's around. So this is TTM. It hasn't updated yet. It's 11,165, right? 11,165. So put it here, 11,165. Now, free cash flow. Let me make sure. Well, yeah. So we're good on the free cash flow. Yeah, we're okay. So by doing this, you see the 10-year projection here at 7%. Outstanding shares. Now, again, I want to double check to see in terms of price to sales. I want to make sure that we're getting the right price to sales here. So give me a moment to make sure we get the right one here. Okay. So we go here and give me a moment. Again, we're doing this in real time. I haven't done this analysis, so that's why I'm, finance is boring, right? If you don't like it, you really have to like it. Okay, so let's go to the valuation, and yeah, so it's around a 4, but honestly, it's around a anywhere between a 4 and a 3.5. So to be careful, it's a 3.5, right? It's a 3.5. And again, if you take the average for the price of sales, I would take the average, given that we had a really huge 2022, 2023. But if you take the average 3.5, you go down here and you zoom in now, okay? Because I have trouble seeing this. So you could see in 10 years, we should see, okay, so let me show you. So here's the bear, here's the base, and here's the bull. The base is 141 and the bull is 235. Okay. Now the halfway point is just 235 plus 141. Okay. That's 376. 376 divided by 2, we're at 188. So you can see this year it's worth 188 around, right? Which is not too far off from where it's at. And again, that's the dividends, right? And again, I'm sure it probably hit 188, recently. Like it was just 180. It was around 180s literally last month. So, or 2 months ago, right? So, so it's probably, maybe due for a correction. We'll see. But overall, it trades a little bit above a premium, given that it gives a dividends. But overall, if this company continues where it's at, it's definitely you're gonna almost double your money in 10 years. Almost, right? You're gonna almost double your money. Yeah, about 10 years you'll double your money, right? But we said 7%, but we did say 3.79%. That's what analysts are estimating. And if you do the analyst estimation with the growth rate, you could see kind of like the strategy here. $342, only like a $70 increase here, which falls in line if you look at the 5 years of Hershey's, falls in line with its value here. Okay. So overall, I mean, it's a safe company, gives dividends, but it could get disrupted. But overall, you could see, uh, um, you know, you could see the value of the stock terminal and how it basically gives you kind of an idea. And you can play around with this, these numbers. If you don't agree with me, if I'm putting a wrong number, let me know. Again, again, I could be wrong. Again, this is just an educational, purpose here, right? But you can see, the average is around 200, and it could increase, like this, but it's not going to go up to 400, in a year from now. That's not happening, unless they do something. Unless they buy out Mr. Beast, maybe, right? But I don't think he's selling, right? I don't know. There's something revolutionary, right? So that's kind of how you do it. There's a lot that we did right now. So just to recap, we did an intrinsic value automated calculation using Brain Machine to get all these. Then we went ahead and did the Brain Machine graph. We got the table. We took the data from the table, which was normally supplied by Morningstar, but then they literally gave it away. If you don't believe me, Morningstar, watch this. Morningstar 10-year financials, and go to Reddit. I'm sure someone talked about it here. Look at this. Here, this is a page. Morningstar ended their 10-year financial ratios, any free alternatives for foreign stocks or whatever. And people are upset. You can't even buy it anymore. It's not even free. It's not, I was just going to have my members just pay the freaking subscription and get the data there, but they weren't even offering it. So, so we had to create it, but we did. It's right here. So we did that. Okay. So there's that. And we went in and did that right there. We did the annual estimation. We did a manual intrinsic value calculation here. We did a compounded annual growth rate calculation and a 10-year projected stock price linear progression analysis. So lots of stuff we did right now, but I hope this was helpful. Give it a like if you like it, unless they buy out Feastables, right? Right? Well, I know, right? Something. Yeah, I'm 17. Though I have, that's really good, man. 17 and you learn this. That's you're almost, you're pretty much in line on my path right there, man. You're learning fast. I actually, that's pretty good, man. That's really good. 500 invested, as well as out of my goal, 10 SoFi where I see greater potential. I'm holding, speaking about SoFi, they just got that NBA, collaboration, NBA, the NBA bank. That's pretty good, guys. Yeah, so that's all I have for you guys. But if you do find value in this video, for folks that are not part of our Mastering or Lifetime Access, if you do see value, you can go to alstocktrades.com. We do have a firm financing available. So I think it turns it into like $50 or $70 a month, but then you own it. It's lifetime. So that makes it available for folks. We have partners contracted out with a firm and PayPal. And yeah, so that's pretty much it, guys. You can see how this protects you and kind of gives you the analysis. But again, most Americans, they're not going to do these numbers, right? When I say most Americans, just your normal day Joe, they're not going to do these calculations, right? They just don't know this stuff exists, right? But that's all I have, for you guys. So I hope you enjoyed this video. I hope this video was a success, Wes, and I hope this was able to be able to help you out here. Okay. All right, ladies and gentlemen, it's a privilege and honor, and I will see you on the next one.